Hello, welcome again. This is Christopher Aaron. It's time for our weekly gold and silver update for September 25th, 2015. I'm coming to you from iGoldAdvisor.com. And let's get right into it this week, guys. It was another tumultuous week in the stock market, the broader markets, especially internationally, as some of the ramifications of the Fed's interest rate non-decision continued to flow through the broader markets. And what we want to do is pay attention to how this impacted the precious metals. So for the gold market, let's get right into our 2-year chart here. We have our key up again. This is the same key that we use every week, but for those of us who are new to some of these videos, I just want to point out some things as we go along. But we had the price of gold this week come down in the beginning of the week and then make this surge yesterday on Thursday before dropping back a little bit today on Friday. And what we're looking at here, the situation is over this 2-year time frame, we are still in a multi-year decline here, as shown by these long-term magenta trend lines. The black trend lines, of course, show our support and resistance levels. You can see we had a very strong area of support here between 1130 and 1150 that was tested a few times over the last year, broke down in July, and attempted to come back up and over again here in August, and is now attempting to do that again in September. It failed in August, and the price of gold was held in check by this new blue intermediate trend line here that we're showing. And this trend line has been serving as resistance for the better part of 2015. So we can see there's been 1, 2, 3, 4, 5 attempts by gold to get above this stronger downtrend line here. And that corresponds with this previous resistance and support level here, this current resistance level, I should say, which was previous support. Now, we are looking at this also from the standpoint of this pattern that we call a head and shoulders pattern, which gives us a target of $990 an ounce. Now, of course, these patterns are never 100% certain, and this is just giving us a guideline. But until proven otherwise, until this price of gold decisively breaks through this primary downtrend line, we have to respect this. So we have to say there is a chance for further weakness to be coming up here over the next several weeks to several months. And we're going to do something a little bit different this week, guys. We're going to show gold in relation to the gold mining sector as we watch this bottom come into play, because we can often gain some insight on the short-term price of gold by studying the strength of the gold mining sector. So here we have the GDX fund, the larger gold miners, and you can see a lot of interesting comparisons here between the price of the miners and the price of the gold. And I won't spend too long on this here, except to say that that support level that we had representing around 1130 to 1150 on gold was here represented on the GDX fund right around $16 to $17. And you can see that broke down also in July, attempted to come back up, and has now come back down into these lows. So just keep this in mind here. We had this breakdown by the gold mining sector, whose profits are leveraged to the price of gold and often lead the price of gold. And you have that still here down somewhere near the lows. And to go back to that gold chart, you have gold that has come significantly off these lows around 1075. So this is just another indicator that there may be some weakness in the price of gold coming back down to meet the performance of the gold miners again over the next several weeks to several months. So that's why we like to look at that. It's just another piece of evidence that we can use to help make some short-term decisions here. To zoom into the price of gold here over the last 6 months, you can again see this downtrend line that we were looking at. And here's those hits, those repeated hits on this downtrend line that again attempted to break out but failed to do so, it looks like, this week. But we'll see. If this breaks out here and sustains that rally, we may be looking at a price of gold that is not going to come down significantly any further. So I remain open to that possibility. And just to back it out again, we want to remind anyone who's new to this channel that what we're looking at here is a bottoming process. This is a long-term bottoming process amidst a secular bull market. You can see that by the lessening of the slope here in the downtrend. So you had a more steep downtrend here in magenta, and you've had a lessening of that downtrend. It's still moving down, but it's less and less as time goes on. So what we're going to be really watching for here is to see this short-term trend line get broken like we're looking for. And then when that happens, we'll turn our attention to this primary blue downtrend line. And when that can break out above that primary downtrend line here, we're going to have a strong indicator that the bottom was put into place. And we'll be then looking at a series of rises and declines that start to move out of the bottom and approaching these highs again over the next several years. So we're watching for that. I'll be bringing that action to you as we go along. We can all follow it together. So just a takeaway here on the price of gold, we're looking at the short-term declines that continue to be possible here. A piece of evidence for that being the underperformance still by the gold mining sector. And let's not forget that reference chart here on the left of a long-term bottoming process being put into play. This little chart here showing you the 35-year perspective. The bottoming process being put into play after that multi-decade breakout above the previous all-time high of $850 an ounce. That is very, very significant here for a market to make such a breakout. And we've gone into more detail on that in some of the other videos. Moving over to the silver side, guys. Similar situation with some different intricacies. Due to silver's industrial demand, silver sometimes will move a little bit more with the commodity sector or even the stock market. You'll notice some days where gold is moving lower and silver is moving higher or maybe steady because the stock market is moving higher. And that's showing you that, yes, silver has a significant investment demand, but we're also looking at what is a very large industrial demand in silver. So a similar situation here, you have this significant long-term downtrend going on in magenta with a shorter-term downtrend that we're looking at bumping up against here in the last several months. You had a false breakout above that downtrend line in May. And we're also paying attention to what is a mini head and shoulders pattern here in the silver market that would target somewhere around $12.50 an ounce. So similar situation to gold, just slightly different prices. And of course, a silver market that has yet to exceed its previous all-time high. So here, to do a relative comparison, we turn our focus to the silver mining sector, just how we did with the gold mining sector. And this time I like to use the individual miner silver Wheaton, ticker SLW, which happens to be one of the strongest silver miners on the planet. And so I use that for comparison, and we just see how here silver Wheaton has taken that significant downtrend, breaking through a long-term support band between 16 and $19 a share, broke down, made a new low, and is here bumping up against that downtrend line. But just keep in mind, here we are here around $12 a share today. And when we switch this back to silver, we'll see silver is getting close to that previous support level, whereas silver Wheaton is down here way below that support level. So what that's showing us is that there is a strong possibility that silver will indeed take another down leg here, as silver Wheaton often leads the price of silver in both directions, sometimes with a significant advance. In other words, several weeks, sometimes even several months ahead of time, silver Wheaton will move before the price of silver. But let's not lose hope here for people who are looking at this market from a long-term perspective. Again, we have a silver price that is lessening its downtrend here, and it's approaching a very long-term uptrend, which could get broken to the downside briefly. We're maintaining that possibility. But even if that were to happen, I would be looking at that to be a final flush out of the silver market, and I would be looking for the price of the silver miners, such as silver Wheaton, to perhaps hold their existing lows as silver maybe makes one brief move down here to the $12 region. That would be a very strong indicator of a long-term bottom, which is what we're looking at here. So we're going to be looking at this silver price kind of coming down, lessening and lessening its steepness, and at some point here turning the curve and breaking this blue primary downtrend line as we put in a very, very long-term base. So we've talked about these indicators here, and then we are again reminding people of the 35-year chart for the price of silver that has yet to exceed this all-time high. And we're saying that after this bottom is put into place, you're going to have the resumption of this bull market in a stepwise fashion over the next several years, ultimately exceeding its former all-time high is what we're looking for here at iGold Advisor. I hope this has been a good update for you. Thanks for joining me. Feel free to check out the website, and we will try to continue posting these updates at least on a weekly basis, and more often when the market conditions warrant. Thanks for joining me again, guys. Have a good weekend.